Okay, folks. So you're very welcome to this week's members meeting. So because every day now I'm putting out the updates on the trades that we actually have on, the Thursday meetings would be great if they were more, let's say, interactive. If you had specific questions on stocks, options, whatever it is, I think it'd be more worthwhile for you guys rather than me repeating what I've already put out this morning. Having said that, if there's something changed in the interim and I think needs to be mentioned, I'll mention it at the beginning. So that's hopefully what the flow is going to be from here on in on these weekly members meetings.
Right, and I think those videos, links, the short videos you're sending out, Stephen, great idea. Yeah, really appreciate that. The likes of this, the only question I have here, I suppose, today is, the AI, is it a bubble? Is it not a bubble? I mean, I know the likes of Google, Nvidia, they're value companies anyway. So the question is, do you take your profit off the table? Do you hang on in there? You know, there's going to be a pullback, I suspect, but longer term, just your opinions on those. That's really what I'd be asking today. Yeah, thanks.
It's a brilliant question, Philip. And I was reading an article, and more commentators are starting to come on to the financial news outlets like Bloomberg and CNBC, and some are saying that the evidence is starting to show that the spend in AI is actually, the cost is actually eaten into margins actually, and that they're not so sure anymore that the payback is going to be as big as they thought it was. But these are just opinions. There are some companies starting to flag and say, look, our capex is bigger than we anticipated. The cost of running, let's say, data centers and everything is pretty expensive. Having said all of that, I think the efficiencies that are going to come down the line are going to far outweigh the cost. And I think this initial spend will be met with efficiencies going forward. That's my gut feeling on it, Philip, for what it's worth.
Yeah.
I do think short term, absolutely. You know, if you looked at just from an accountant's perspective, you'd say, oh, look, we're spending X. We're not bringing in X plus Y at the moment, you know, so our margins are getting squeezed a little bit. But I think you got to see, well, what's coming in 3 to 5 years' time, you know.
Yeah, and I think anything that I was saying, that they're saying, like, look, the PEs and things like that for Nvidia are quite good. They're actually making money, even though they're doing a big investment. But they're earners, whereas the other lesser known companies, the SMEs that are into AI or have AI in the name, a lot of them, they're not making that. They're potential, you know, so they're the ones to watch out for.
Yeah, absolutely.
You know? Yeah,
absolutely. And that's the thing. It's a little bit like when, I don't know if you remember when Meta, I'll bring up the chart of it actually, because it's one of the stocks I want to talk about today. I don't know if you remember years ago, we could go back in the chart here actually, when Meta collapsed, this was because of their spend into the metaverse. Now, they had a slightly different version of AI, but it wasn't too far away. And actually, the market hated it because of their capex spend. They were going bananas, saying he's gone nuts. He's spending
he spent 10 billion or something, didn't he? I remember it well. 10 billion he spent in a couple of months or whatever.
Yeah, and it was the way he articulated his message at the meeting, saying that we got to keep spending on this to grow it. And then I can remember recording a webinar at the time and saying to people, look, Meta's core business, which is advertising, is actually better than ever, and it's going to get stronger. So if and when they actually rein in the capex, this thing is going to take off. And surely enough, it did. Now, it took off a hell of a lot more than I anticipated. But my point is, that's what can happen. So your question at the beginning was, some people are starting to talk bubbly type thing with AI. You might get at some stage a situation where, as each quarter goes by and companies keep saying we're spending X on AI and the returns aren't coming in, you might get a reaction from the market that goes, you know what, we've had enough of this. We need to see some evidence here that actually things are going to pick up. And you might get a sell-off. I would use that as an opportunity to buy and learn from our Meta experience there. So what I'm saying here is, Philip, my read on it is AI is a game changer, and what's coming after AI, which is quantum computing, is an even bigger game changer. And this is just going to keep advancing. There's companies we haven't even heard of yet that are going to be hundreds of $1 billion worth in years to come. We don't even know their names yet. I think this is what's going to happen, and the evolvement of it. So if we do get a shakeout, Philip, in AI and AI stocks, I would simply use it as an opportunity to buy them and just learn from the Meta experience. But I do agree, a lot of them are hard to buy now because of the valuations. Meta, for example, is one that's popping up now, and I just kind of wanted to give you a rundown of where I'm coming from at this. Is that I'm a small business, right? And we don't have the resources to employ marketing teams and everything else that goes with it, right? So we depend on, let's say, maybe outsourcing that. But AI is becoming a game changer. So, for example, our website host at the moment has an AI feature that's basically prompting us every day how to get more eyeballs on our website, how to maybe push content out, what type of content we should be pushing out, etc., etc., etc. So that's an example with just a simple website hosting platform, on how. And now there's a basic free version of that, and then they want you to upgrade to get their kind of master version as such. So this is what's coming, the service add-ons that's going to come to businesses from this type of thing. And Meta is going down that route as well. Don't forget their core business is advertising. And if they have AI features that's going to help small businesses maximize their revenue spend on advertising, it's going to be, continue to add to their revenue going forward. So that's why I'm kind of getting very interested in Meta on this pullback at this moment in time. So it's a great question you have, Philip. I don't have a definitive answer. Would I expect some sort of a pullback? Absolutely, 100%. When that happens, your guess is as good as anybody else's. What I would say is, if there is a significant pullback in that space, I would see it as an opportunity to buy. Okay.
And with current positions, then, Stephen, hold them, even if there's a pullback, just add to them.
I think so. I think it's hard to give them up, to be honest.
Yeah.
Like Alphabet, for example, Google, which we have, I have no intention of selling that position. I said it before, I was in Alphabet because of, like we bought in way down here, if you remember. But my view on Alphabet was, out of all the mega cap companies, it was the cheapest. And I felt it was being unfairly punished. Now, it got a bit of good news in between. The kind of antitrust case in the US kind of fell apart altogether. That's where you got a big boost. But like, I was looking at their advertising revenue coming in, and their core business is really strong. I'm a user of their enterprise tools, which I think are fantastic. And that side of the business has grown rapidly as well. And then we know about Waymo and other projects that they're involved in that we haven't even added any type of revenue or earnings estimates into that going forward. So my view, this is, and don't forget, they're the leader at the minute in what's coming in quantum computing as well. And for me, I think that's just going to lead to upgrades as we continue to go forward. Yes, there will be pullbacks along the way, but I think stocks like this, you just hold forever right now, and if that ever changes, I'll let you know. But right now, I think you got to shake out an Alphabet, you just buy more of it, So
thanks.
Yeah, thanks for that, Philip. Thanks for that. That's exactly what we'd prefer now from these meetings now, because I'm putting out the daily updates on our trades. I don't want to just repeat myself here. I'd much rather answer any questions that you guys have. But before I do that, just looking at Alaska there, which is one of our stocks, it's up 2.7 in the pre-market, 2.7%. So that trade is starting to move for us, which is good. Flutter is making a bit of a recovery for us as well. As it turns out, got on too early on that one, but I still like it for medium and long term. I just wanted to focus in here just on our crude oil. And again, just to spark any questions you have, because a couple of people have contacted me privately as to, should I go out and out in the futures contract or do the short put option? So again, just to explain the difference between the two. The first one, which is going out and out in the futures contract itself, that's really, you know, you have a 50-50 chance of it winning. And when it wins like it is now, you're going to win bigger than you do with a short put. That goes without saying. Having said that, you've always got to put yourself, it's great looking at this now, right? And going, oh, look, that's obvious. I should have went with the crude oil contract outright. Forget about the short put. But you got to be realistic and honest with yourself and go, right, when it was down here and we were putting this trade on, we said, we think it's going to go back to here. And surely enough, it has. Okay, but we didn't know for certain that was going to happen. So what we did was we offered an alternative trade that said, well, look, if this doesn't hold here, guys, as well, that support down here is where we're going, which is $55. So that's a 10% drop. So remember, one of those contracts is 60 grand. The 10% drops is 6 grand. So you've got to ask yourself, are you okay with that? Can you handle that? You're not, nobody's ever going to be okay with it. But can you handle it? And would you have the stomach to add another contract down here to average in? So that would be one approach to it. The safer approach, which is the one we took and put out as a trade, was still selling the $55 put option on the December crude oil contract. And what that did is paid us up front for insuring the contract to the value of $55. So in other words, we were getting more outs here, which gave us a probability of profit of about 86%. So from a risk management perspective, short put away all day long, it gives you more outs. From an out and out profit potential perspective, obviously buying the futures contract itself. But I would stress to people, have a stomach check on this, because there's one thing saying I'm okay with this, and there's another thing when it actually happens and it starts going south and wrong on you, and then you realize, oh, I'm not so okay with this anymore. So everybody is different on that one, and that's my objective, is to give you different ways of trading this to limit your risk as such. Has anybody any questions on crude oil or how we've traded it or what we're going to do next on it? Okay, no, I'll leave it at that. So pretty much on the short futures position, folks, if in the next couple of days the market value drops under $100, I'm going to take the profit off the table. And the reason for that is, my view is we're probably going to get a revisit of $60. So what I'm talking about here is, if, for example, crude oil gets up to here and the value of that put option contract is below $100, we're going to lock in our profit there of, let's say, about $400 a contract. We'd only have about $90 left, let's say, to gain by holding on to it. But what happens if this happens? It revisits the low again, like it's done in the past here. Look, it just keeps coming back down. So if this happens again, well, we've held on to the contract, and now all of a sudden the profit we had is dissipating. We'll still be in a bit of profit. But what we could have done, if we'd have offloaded it when there's less than $100 of value left in it, is sold that contract again. So that's the way I'd rather trade it, nearly like rolling the put option contract. So when it goes up, there's less than $100 value left in it, get rid of it. When it comes back down, sell the exact same contract again. You might have to go out another week, maybe out into the November expiry on the option. But, you know, if you're taking in $500 every time, you're closing it out at 100, you're making $400 profit. So that would be my plan for the short put option view. Eventually, in my opinion, crude oil is going to end up doing this and go back into the 70s. But while it's down here, guys, that's my go-to trade on crude oil, is selling that $55 put. Now, if I hold on to this contract and crude oil starts falling, I'm going to take assignments of that December contract, unless something has come out in the news, which is quite possible, by the way, that changes my mind on crude oil. But as it stands, thinking about supply and demand dynamics, if oil is trading consistently below $60, it's not profitable for a lot of producers to actually continue mining for oil as such, or drilling, whatever way you want to put it. So ultimately what will happen then is wells will close down. supply gets reduced, demand remains the same, and the price goes back up again. That will be my reading on crude oil. Okay, and that's why when it's down here at these levels, I'm going to use the short put option way to position myself. If it falls to 55, at that point, I'm probably just going to take assignment and try and rally the crude oil price back up into the mid 60s again. So I hope that makes sense. Okay, is there any specific questions, folks? Any other questions anybody has on any stocks or anything that we're holding?
Right, it's Stephen. It's Stephen Gavin here. Can you hear me? Okay.
Yeah. Hi, Stephen.
Come on, tell me. What does assignment of that of the oil look like? Is it just the same as if you've been assigned any put option? Is that what it is?
Yeah, you'll be assigned the contract, the futures contract.
Okay.
So
what does that mean for me? Yeah.
See this position here? See this
on
my screen?
Yeah. Gotcha.
You will have that contract. So that's the December light sweet oil, crude oil contract. So you will ultimately get assigned that. So let's say we get to October the 29th, right? And this contract's at $54. You will have a +1 position in the December crude oil contract.
Okay. So and then it's up to me to sell that at some stage, or what happens? I don't need a fucking tanker outside. Excuse me, outside the door. Does anything happen as such? You know,
Why not, Stephen?
Well, I live in Dubai, so I just stick a hose in the sand and it does the same thing. You know what I mean?
You could go down the road and sell it to someone.
Oh God, no, these guys have got plenty of it. Believe you me. But
no, all you would do, it's a brilliant question. All you would do is before the expiry is sell the contract. You will sell this contract whether you're profitable or losing. So let's say for argument's sake, Stephen, that plays out, right? Let's say we've got to October the 29th, we've been assigned, and now we hold this and it's getting close to expiry. If you still felt bullish on crude oil, all I would do is close this one down and open up, let's say, the February contract.
Yeah, further on. Yeah, okay, that I get. Yeah, okay. All right. So if I'm assigned, I can just then sell it and just take the hit. If that's the case, if that's what it comes down to, if it's less than 55. All right. Yeah. Fair enough.
But the way I'm reading it is, if it does drop down there, I'm kind of going. I'd see it at least testing 60 again, and I'm going to go. Oh, I'm going to make a lot of money. I'm going to make 5,000 on that on the way up as well, plus the $500 per contract I made for selling the put option. So that's the way I would look at that, you know. Okay.
So I great. Thank you.
No problem. Great question. Thanks, Stephen.
Hey, Stephen.
Hi, Richard.
If I can, I joined late. Sorry, about Meta. What price did you say you'd like to get in at Meta, or you'd be interested in getting into Meta at?
Like I have to be honest there. So if you see our long-term target price there is 824 on it.
Yeah.
I'm hoping, Richard. Now this is hope more than anything.
Yeah.
I'd love to see Meta get down to the 200-day moving average.
Yeah.
And if it did, that's about $700. And at that price, I'd probably start nibbling, you know, because my own view is, even if, for example, we got in here, so I would see this as a short-term and a long-term play. So let's play devil's advocate, right? We've jumped in and we're way too early and Meta starts selling off. Let's say it goes down to $600 or $500 or whatever. I'd simply just average in down there.
Yeah.
My own view would be long term. If you look at the chart, it's always good to zoom back out, and this is really positive. So if you look at that high here, we've taken out that high, you know. So we've created new highs, right? So what you're seeing here is a natural pullback. When that high was created, by the way, look at that pullback. Everybody could have been talking negative. And then all of a sudden, over a period of months, we take out that high again. So my view is we're probably doing something similar now before we create a new high in the stock again. That would be my view. So I would use the 200-day moving average. I'm just going to get rid of those drawings to try and make it clearer. And if you look over the last, let's say since 2023, pretty much the 200-day moving average was a support level, with the exception of what we had earlier on in the year. And don't forget what went on here. This was the trade lunacy that went on. you know, and nobody could legislate for, you know, really.
Yeah.
But other
Sure.
than that, the 200-day moving average act of support. So, like, I mean, if people said to me, Stephen, I'm not waiting, I'm getting in now, I wouldn't be holding back, you know.
Yeah. That's great. Thanks, Stephen. Yeah.
Okay. No problem.
On a similar vein there, which I don't mind. Sorry, are you finished there? Sorry, I didn't mean to jump in.
Yeah, that's the way to.
Come on. What about the discipline with the allocation in terms of the percentages of portfolio for likes of Google? If you can only see it going one way, it's not going to go one way, but when there is some sort of correction and time to buy in, is 5% still where you're aiming for, or can you stretch it out a bit?
Yeah, I always, 5% is the rule, and the reason is, Stephen, let's go to, we can do all the homework we want. There's Flutter now, massive upside, right? But let's say, for argument's sake, we were up here and we invested 5 or 10% here now. Like, that's kind of that's a significant whammy down. Do you know what I mean? Now, long term, I think it'll be fine, right? But what I'm saying is, you want to err on the side of caution, because no matter what happens, who can legislate for the UK government increasing taxes? Do you know what I mean? It's hard. That comes out of the blue. That changes the goalposts, and that can happen with Meta as well. For example, let's say all of a sudden Donald Trump wakes up in a bad mood and he goes, Meta, I don't like Mark Zuckerberg anymore, I'm going after Meta. And this is what's actually happened.
It has happened, yeah, of course.
Yeah.
It's precedent here. Of course,
so absolutely limit it to 5%. And if you do that, you won't go too far wrong. You'll have a few losers.
I'm with you. Yeah, I got it. I just thought, is there an appetite for a bit more? But I'm not a risk averse, but I have to maintain discipline as well. So I'm all for that.
Yeah, absolutely. Ones I'm kind of getting interested. It's interesting, MGM and Caesars here, pulling back at the same time. So that's like, I'm surprised at the level of pullback, because it all seems to happen since there was a report out from China on visitor numbers to Macau, I don't know what way you pronounce it, to be honest, which is the gambling center of China, basically, and all of these have huge presences there. And the numbers were better than last year, but not as big as what the analysts had expected. And since then, the likes of these have all sold off heavily, and I'm beginning to wonder, is a good opportunity to jump in, so both of them, are in the same business, and I kind of just like them. I like them, their models, their business model I like. So I think this is MGM is one that I'm likely to go for, both long term and short term. Wetherspoons is more a short term one if I was going to jump into it. And the reason I'm saying that is, it's just the upside isn't big enough for longer term, And if I was trading Wetherspoons, for example, see this downtrend, I would only trade it up to the downtrend line. I wouldn't trade it up to its 20-day moving average. So I would literally, the minute it hits that downtrend line, I'd be getting out if I did get into to Wetherspoons. So again, just little nuances with each individual stock here, GoDaddy, I like stocks that kind of go into this regime. So let me bring you up. We missed this one, or I missed it. Yesterday I was saying this is my next one. I just want to give it another day to prove itself. And look, it jumped 5% yesterday. I love stocks that are in this established sideways trend already and have hit the bottom of that trend. They can always go lower, guys. I'm not saying they can't, but it's more appealing to me, especially if the long-term outlook is quite good for the stock. So we come back here to where was I? Was it MGM? MGM. You could argue there's a similar pattern here. You could say, look, we've kind of been rolling really through these levels for quite some time, and that's, I suppose, one reason why I'm actually liking it down here. Wetherspoons, I think there's probably more for this to go to the downside. I think this can come under 500 or under 600, maybe into the mid 500s. So, and then when we get to GoDaddy, again, it's something similar here. We hit support, it's held, I think it's more likely to get to that center line, you know, and that's really what we're trading for the short term there. So just a quick look at other stuff that's going on. Bond yields kind of not gone anywhere really. They're kind of just stabilizing now. So that tells you market ain't convinced there's rate cuts coming, guys. And TLT has pretty much done nothing since. So for those of you who are still holding TLT, it's paying a great dividend. In the last 3 months, you've earned 1% dividend. Over the course of a year, you'll earn about a 4% dividend on it. So I don't think there's any harm in holding on to it at 89, for example. Now, if it was up in the mid-90s or 92 to 94, that's when I'd be selling that. I just wanted to mention that because I know there's a couple of people still holding it and asking me what to do. You're getting paid a decent dividend. So even if it does pull back down here, it's one of those where you'd add more. And I suppose people who are in USO, so some people went the USO route instead of actually buying crude oil. Contracts are selling the puts. You know, again, you can literally trade that momentum, trade that like a short-term trade up to the center line and walk away. So that's the way I would trade crude oil until we get established that, look, this whole glut of supply is starting to diminish. Until we get some evidence of that, I would trade crude oil as rather than hold it. So I don't see it as a long-term play. And I just wanted to make that clear. My view on this is you're in this, you're trading it within this band, and you're taking your profit and you're walking away. So if you're doing it on the futures, do it on USO too. You know. And then as regards other stocks that we'd been looking at, this Amazon, I don't know if you remember, we had created this option trade, or we talked about this option trade where we'd finance literally buying either a call option on Amazon or a bull call spread. And you can see that actually would have worked out nicely there now. We were talking about selling the $200 puts, buying a call at the 220 strike, and then one was financing the majority of the other. We would have benefited nicely out of that. So I just wanted to remind people of that. It is a great way. I call it the Super Bowl strategy, but your account has to be big enough. And remember, 100 shares of Amazon is quite a lot of money, you know, so it's not cheap. And that's why you got to make sure it's no more than 5% of your account there, okay? So as I'm trading, guys, as I'm adding stocks to the long-term portfolio, I will let you know. I'm most likely, I'm really interested in getting involved in Meta, MGM, missed the boat in Smurfit. If it comes back, we'll let you know. Probably more interested in those two. And then as a short-term trade, I'd probably see a bounce back in Wetherspoons in the short term, but I certainly wouldn't hold it longer term. I would use that as an active trade. And what you got to be aware of then, guys, if you are doing something like Wetherspoons, you know, you're getting charged stamp duty on the UK stock market. Don't forget that. So that eats into your profit too. And that's why I much prefer the short-term trades on the US stock exchange where there's no stamp duty. So just bear that in mind when you're buying the UK or European stocks. The majority are stamp duty on them, okay? So is there any questions, anything you want me to look at, folks? Currency?
Hey, I have a question for Stephen here, if you don't mind, just on that TLT. Sorry,
Yeah.
there's a lot of noise here. Is it worth getting into it at this stage, or would you wait for a pullback? And I'm on a phone here rather than a computer, so I can't quite see with the chart there. But where is it at now? It's about 89-ish or something thereabouts.
Yeah.
Is that what it is?
So here's the thing, right? So I think you've got to think of TLT with jobs data. So here's the issue we have. At the moment, the US government is shut down. There is no jobs data, right? So that's number one. Number two, the Fed have changed course because of jobs data. Think about it. That's all they mentioned was jobs data, and they would need to protect jobs, right? But I listened to a couple of well-respected economists who say that they've got it all wrong with the jobs data, that it's a transitory effect because of what's happening with ICE in America and the fact that there's 25 million legal workers who are in limbo, who are afraid to go to work because they don't know whether they're going to get thrown out of the country or not.
Yeah.
So they're actually legal. And they're actually saying that's skewing the numbers. It's actually, it's not a realistic, they're not realistic jobs data numbers in their opinion. And what they're saying is this is going to smooth itself out in future numbers. And actually, that's going to cause the Fed not to cut at all, you know? So if that is the case, then the answer to your question is no, don't buy TL, you know? Yeah, you know? So
Okay.
I would much prefer to see it back down here, and then I think the risk is lower on it, you know?
I was just okay. Yeah, I was looking at it from just a dividend perspective, because instead of holding cash, have it to do something for me if it's not going anywhere. But
Yeah.
Your thoughts are, you know, this will eventually, you know, even itself out, and you'll find that the numbers won't warrant a you know, a change, or the numbers will be they're currently skewed, but will come back to be more favorable, presumably, because
Correct.
there are more people that are open. Yeah, fair enough.
Correct. So, like,
Okay.
I think it's a risk up here, Stephen, is my answer.
All right.
Yeah.
Okay. No, just thought I'd run it by you. Thank you.
Yeah. No, good question. Thank you. Look, guys, that's it for now. I'll keep you posted. I'm just looking there, by the way. Happy days on Alaska Airlines. It looks like we've got our timing bang on. It's up 3.8% in the pre-market. I'm going to see what news is happening there just before we go anywhere. It's up at 51 now, pre-market. So that means we're going to be up just over 4% on our trade, or just under 4% in a matter of a week. And I'm not seeing anything in the news flow just yet that's coming out. So we'll see. It's still an hour to go to market opens, I think. So we'll just see what happens. But that's a positive sign there. So that means if we look at the chart of it, we were going to trade up to 55, I think. It's going to open up at 51. So yeah, very, very positive. And we'll monitor that, and I'll let you know when I decide to exit. Okay.
It's Stephen again. You mentioned that was one to look at for short and long term. I just wanted to clarify your definition as such. You know, it's as far as short term, yes, get in and out with the short term targets. Or is it, or hold on to it then for a longer term? Is that what you're thinking, or get in and out with a view to getting in at some stage to keep for the longer term? I'm just want to know what you're, because I'm a little confused as to, is it one or either, or is it both? So if you understand my question.
It's a great question. So actually what I'm saying there is I've got two different types of clients, Stephen. People who love trading, actively trading. They don't want to hold stuff for too long. So the short-term target is for those people, and then the longer-term target there is for people who are more into long-term buy and hold and are happy to sit on this for a longer period, i.e. 18 months to 2 years type thing. So I'm trying to cater to both, really. So for people who are interested in actively trading stocks, that's what the short-term target is for. The longer term is if you're holding for longer. Not every stock, by the way, is for both. So, for example, Alaska and Flutter, I'd be happy to hold them for the long term. But Wetherspoons, I wouldn't, for example. You know, now when I say long term, if we wake up tomorrow with Alaska Airlines and it's up at $68, well, then I know, you know, and we just got lucky, it hit the target in a very short period of time. Long term, I'm just assuming it's going to take 2 years to get to $68. It's whatever happens first, you know.
Okay. All right, fair enough. I was just curious, would I be, I like as I mentioned to you before, I like the tempo, I like the pace, I like being active. I'm keen to be at this a lot of the time. So being in and out suits me. But I also have a longer term plan as well. You know, I got a kid I got to send to university. I got to think about when I finish up work, or I have to get hit by a car. You know. So I need to plan ahead, so to have something in place, so to hold it for the longer term with that higher price in mind is favourable too. I'm just, maybe one day we'll have a chat about that ourselves. You know, diving in and out, and at some stage get in for the long term. I'm not sure, but I'll save it for another chat. Okay, thank you.
No problem at all, Stephen. No problem.
Ta-ta.
Okay, guys. Any other questions before we wrap it up? No, okay. So happy days.
Thanks,
that's great. Happy days. Our oil trade's gone good. Our SPY trade has gone well. our Alaska Airlines trade is going well. Flutter has a bit of work to do. And if I trade any more, I will let you know. So thanks and bye for now. And if you have any questions, just reach out.
Thanks, Stephen.
Thanks, Stephen.
Cheers, guys. Bye now.
Cheers.
Bye.
Bye-bye.
Bye.